What's up, you guys? My name is Hartley, and in this video I'm going to walk you through the 3 different ways that you can buy into an initial public offering or IPO. Here's everything you need to know. Let's go. Okay, so an initial public offering is the first public sale of a stock. It is used to raise money in order to help that company expand. And now when a company goes out and goes through an IPO process, they say, okay, we want to raise $500 million. We're going to sell this many shares at this price, and let's see who wants them. And then on a specific IPO date, those shares then become publicly traded, and that company now has very specific reporting requirements. And so in this video, we're going to break down the 3 different ways that you can buy in. And so number 1 is to buy the actual IPO at the price that the company issues it at. Number 2 is to buy an ETF, and number 3 is to wait for day number 1. And so we're going to walk through these 3 options in detail in this video, starting with number 1, and that is buying the IPO. And so the first way to do this is to reach out to your broker. If you're with your bank or if you're with Questrade or Interactive Brokers, doesn't really matter. Every single broker is going to have a way to handle this kind of particular to them, and they will also have their own restrictions and limitations. And so with Questrade, that is the brokerage that I use, and they use something called the IPO Center. You basically go in there, you can see which stocks are available, which stocks are upcoming, and which stocks have closed, and you can basically try to bid in and get in on that initial public offering. Now, the problem here is that there are some restrictions. It is not quite as easy as just going in and buying the stock. With Questrade, for instance, you need to have a minimum of $5,000 that you can basically put towards that stock. It needs to be liquid, and you need to be able to basically hold it there for a couple of weeks until that company goes public. Depending on where your brokerage is located, you may also have limited access to Canadian or US markets. You might not be able to invest cross-border depending on where your account is and who your brokerage is. The other thing that you need to understand is that you may bid $5,000 to get into the Airbnb IPO, but if that IPO is oversubscribed, you may not get filled on your order at all, and your $5,000 may have just sat there and then come back to you a month later. So you need to be well aware of that. Nothing is guaranteed in this process. However, all of these brokers do have newsletters that you can sign up to so that you can get alerts on when different companies are going public, when the documents are available, and when you can actually put your money in and try and get into that IPO. Now with Questrade, this is what the IPO Center looks like. As you can see, they have currently 4 different companies that are open or that are about to IPO or are currently raising money. You can also go through all of the closed listings as well, and you can dive into the basically documents here. It's really, really great. They also have basically an IPO bulletin. So I signed up for this. You put in your name and your information, and then they will let you know when different companies come available and when different companies are raising money. Now, if you're trying to do some research before the companies ever get to these IPO centers or any of these basically platforms, you can go to a few different websites. Number 1 is the NASDAQ, and number 2 is the New York Stock Exchange. Both of them have little sections on their website for IPOs, and you can find basically a calendar of what's upcoming, which companies are prospecting their IPO, and what stage of the IPO process they're actually at. I also use MarketWatch. They actually have an IPO calendar that basically assimilates all of the different market information, and I think they do a really good job when it comes to tracking and giving you information on IPOs, so I highly recommend them. Now, if you want to find the real financials and the real IPO filings behind these companies, in Canada, it is a website called cedar.com, and in the USA, it is a website called edgar.com. And basically what these websites do is they act as a database for every single public filing. So if there's any type of financial statements, disclosures, notices, anything like that, you can find it for any Canadian or US company on these websites, and you have full access to the revenue, the balance sheet, the breakdowns of every publicly traded company. These are great resources. They are not good websites by any mean, but they are great resources. Now, if you are looking for a brokerage and somewhere to trade, definitely check out Questrade. I have a link down below that will give you $50 in free commissions, so you can get started totally free, and if you don't like it, pull your money back out. There's no problem, but I think you will like it. I use it every single day, and I highly recommend it. The link is down below, $50 and free commissions. Now, the second option you have for getting exposure to IPOs is to buy into an ETF or an exchange traded fund. What that is a group of companies. And so you buy one share or one unit in this ticker. In this case, I'm looking at FPX. And what that does is it gives you exposure to 100 different companies that have recently IPO'd. And so, for instance, FPX is one of the largest IPO ETFs, and they hold companies from day 6 to 1,000. So they don't get in right on day 1. This ETF will buy into the shares, and they will hold them from day 6 to 1,000. They will do it for 100 different companies. And the advantage here is it allows you to get exposure to the different IPO companies, but it also gives you diversification. So basically what this fund is it's really great for growth of young companies. If you think there's a lot of IPO action coming up and you think there's a lot of potential, this is probably the best place for you to invest, because you don't have to pick and choose which horse is going to win. This gives you market exposure to all all of the recent companies that have IPO'd from basically day 6 to 1,000. There's over 100 companies in there, and I highly recommend it if you don't want to pick and choose different companies. Here is a list of 8 different IPO ETFs. Each of them has different basically goals and objectives and marketplaces, so make sure you do your due diligence on it. FPX is only holding US equity opportunities, so there's no Canadian exposure there. So make sure you know what you invest into, but here's a list of 8 different ones that you can take a look at, and all of them seem to do pretty good. Now, your third and final option for buying into an IPO company is to buy in on day 1. They will basically open the market. That's who you see ringing the bell is when an IPO happens. That's usually what that picture is, and basically at 9 a.m. or 9:30 in New York, you are ready to go. That market opens, those stocks start to trade, and you better be ready for a roller coaster because the first day is usually not very smooth. It is extremely choppy, it is super volatile, and you have no idea what's going to happen to that price, if it's going to drop by 40% or if it's going to double in 20 minutes. You have absolutely no idea. You have no technicals to go off of. You have very few fundamentals to go off of, and you are basically making a bet on the company, the business strategy, and the management team, because most of the time they don't make money yet, and there's no charts to actually look at. So if you buy in on day 1, it's just as risky as buying in to the IPO. However, hopefully you can buy it at a dip. So let's say at IPOs it dips and then comes back up. That would be the best case for you if you can buy in on that dip. However, this is definitely something that takes a little bit more attention, a little bit, you got to be sitting at your desk when that stock starts to trade, and you got to be ready to go. And I highly recommend holding these stocks long term. It's pretty tough to day trade these IPOs, but that is just my experience. Maybe you got your own strategy. Now, if you're interested in learning any more about the stock market, I host a completely free course on Skillshare. It is hosted there. There's over 8 hours of content. You get a 2-week free trial. So you sign up for an account, you can do the entire course in under 8 hours, and then you can cancel your subscription. It won't cost you a single thing. If you don't cancel, I think it's like $12 a month after that, but you can cancel anytime. There's over 600 students that have done the course. There's 30 plus reviews for you to read through, and there's a ton of amazing content on there, all dedicated to helping you learn more and improve your trading. So if you're interested in the stock market at all, I highly recommend it. Definitely check out the links below. And in summary, there are 3 ways to buy into an IPO. However, you need to expect volatility. None of these stocks open at $20 and are at $21 the next day. They're usually up or down by at least $5. So you need to expect some volatility there, and you need to do your own due diligence. I'm looking at Airbnb right now because I'm super interested in it, but I am diving through the financials on the Edgar website. So definitely do your due diligence. And if you guys get any value out of this video, please consider hitting that like and subscribe button. I sincerely appreciate it. These videos take me some time, but my only goal is to help you make more money and hopefully get in on some of these runners before they're big names like Tesla and Apple. So if you get any value out of that, show me some love. I sincerely appreciate it, and I will see you guys in the next video. Good luck trading.